Hi, I'm Kate Stalter at the Investors.com Daily Stock Analysis for Monday, June 23rd. If you like heavy metal, we've got a stock for you today. Not Metalica, but Metalico. And you see here the ticker is MEA. And Metalico is a scrap metal producer. It recycles the metal from demolished buildings and totaled cars. It's part of today's IBD 100 list of top performing stocks, and it's featured in one of the mini articles that accompanies that section. Now, it's part of the metal processing fabrication group, which is ranked number 13 among IBD's 197 groups. And if you're wondering what's driving the group to those heights, as you might have guessed, it's strong demand for steel from China and other parts of the world. Now, there are several stocks in the group with very good relative strength ratings in the 90s that you see right here. So that means that the price growth of some of these companies is outperforming most of the market. But if you notice with the earnings per share ratings that in several of these cases, the earnings growth has really not caught up to the price growth as of yet. Now, Metalico, though, shows a healthy combination. It's got a relative strength rating of 98, so its price action is outperforming 98% of stocks, and an earnings per share rating of 94. So the earnings growth is outperforming 94% of stocks. And here you see a composite rating of 99, which is excellent. That's an indication of strong sales and earnings growth as well as price strength that's outperforming the market. And you see down here that there has been strong quarterly earnings growth in the past 3 quarters. And when it comes to sales, there's been some acceleration over the past 4 quarters. And that's a sign of that strong global demand mentioned just a moment ago. Now, if you're familiar with CanSlim and you're thinking of the N for new, here in this case, as we've seen often lately in many of the leading stocks, it's a new industry condition, that heavy worldwide demand for the product that is the key growth driver right here. So taking a look at Metalico's chart, the stock cleared a base on base pattern right here back in April. And what I want to do is trace some of these patterns so you can get a better look at how they took shape. So there's a cup-shaped pattern that Metalico formed late last year and early this year, and I'll show you where it broke out of that pattern. So right where I drew that arrow, it cleared the pattern, but then notice it did begin sinking into a new area of price consolidation, another base, and I'll trace that for you. So there's the second area of price consolidation that it formed, and the second area was a 6-week cup-shaped pattern. And if you're familiar with bases, you probably remember that most cup-shaped bases should take 7 weeks to form, but sometimes a cup can be successful after only 6 weeks. So here it was a 6-week base, and I'll show you how to count the weeks in the base. Okay, so see where I've just drawn that arrow to that pink week right there. What you do is you start counting weeks in the base on the first down week after the last closing high. So that's what you have right there, the first down week after the last week that the stock closed higher than the week before. Okay, so you have 6 weeks within this particular pattern, and on the 7th week, right here where I'm just drawing that line, it did clear the high on the left side of the pattern over here. Okay, so all in all, it was a 6-week base, cleared the base in the 7th week. By the way, this was a cup without handle pattern, and it's the cup without handle that can often have a successful breakout after only 6 weeks, which is what happened here. So I'm going to clear some of these lines so we can get a better look at what happened next. So Metalico, after clearing that pattern, it rallied to a new high right there in May. And then just like a lot of stocks we've seen lately, it pulled back just as the general market was weakening. And it did find support right here at its 10-week moving average. And the 10-week moving average is something that's been mentioned quite a bit in the DSAs lately. It's this red line running through here. That's the average of closing prices over the past 10 weeks. And that's a place where institutional investors like pension funds or mutual funds will step in to buy shares, often to support an existing position. Now, in a healthy bull market, 10-week support can offer a buy range. But since the market is now in a correction, it is not a time for buying. Instead, the better course is to keep an eye on stocks like Metalico that have solid fundamentals, strong industry group, and good institutional support. Now, one more thing I want to show you about institutional support on this stock. Notice how the volume really began a noticeable spike last year. And if you've read How to Make Money in Stocks by IBD founder Bill O'Neill, he mentioned some stocks from back in the late 1950s and early 1960s, like E.L. Bruce, Certainteed, and Syntex, and all of those had big increases in volume before they reached proper buy points. So when you see this kind of big volume increase, along with these good fundamentals that we looked at a little while ago, that is an indication that this stock may be worth continuing to follow. Now, this one is only supported by a small number of mutual funds, just 18 in the most recent quarter, but you notice that number has been growing, so that's a good sign. And also notice that Metalico is a very small stock. It has a market capitalization of only 618 million. So just a word of caution, you always have to balance the good points that you see, which this stock definitely has, along with some of the areas that you might want to be cautious about, like small market cap or a small number of funds supporting the stock. That's the daily stock analysis for Monday, June 23rd.